This is Carrie Johnson with the Iowa Department of Management, and this webinar is intended to provide county auditors or county staff that are responsible for preparing the county budget an overview and some basic information regarding the county budget process, including a discussion of tax levies and timelines, as well as provide some updates that are pertinent to the completion of the fiscal 24 budget forms on the Department of Management system. This particular webinar is designed more in mind for folks that are newer to completing the county budget, as it does provide some basic information regarding tax levies. If you're an experienced county auditor and you're just looking for more of an overview of changes and reminders, there is another webinar that you may want to review that is shorter and provides simply an overview and updates. So we're going to start out in this particular webinar with a discussion of some basic or general budget information. First, I do want to point you to what we refer to as our county resource page. It is dom.iowa.gov/counties. And the reason I point you there is just to give you an opportunity to bookmark that page. It is where you would go to view most of the information and access the applications that are pertinent to counties. So let's have a brief discussion of the county property tax levy options. First of all, it is important to remind folks that 331 talks about the general powers and limitations of a county as it relates to tax, and it does indicate that a county shall not levy a tax unless it's authorized by statute. So just meaning the only tax levies that you can initiate within your county are those that are particularly prescribed in statute. You do have categories of property tax levies. You have general county services levies, rural county services levies, debt service, and other taxes specifically provided by law. Some examples of those are emergency medical services and unified law. And we'll take an opportunity to go over these now in greater detail. I do want to also let you know that your general services and rural services have basic property tax levies, and we refer to those as the general basic and the rural basic. For your general basic, your levy rate limit is $3.50 per $1,000 of taxable value for services provided that are general county services. And when we say general county services, we're talking about services that primarily are intended to benefit all residents of a county, including secondary road services, but excluding services financed by other statutory funds. So really, your general basic is your general operating fund, right? That's where a lot of your expenses are going to be occurring. For rural basic, your levy limit is $3.95 per $1,000 of taxable valuation for rural county services. Rural county services are those services primarily intended to benefit those persons residing in the county outside of the incorporated areas. This does include secondary roads, but excludes services financed by other statutory funds. So this is those services intended to provide uh, service to rural residents specifically. And if you are levying for services and expenditures within the rural basic, you want to be able to demonstrate that those services are primarily for rural residents. There are opportunities in statute for the county to exceed those basic property tax rates. Those are spelled out in 331-426. The reasons why you can exceed either the $3.50 for general or $3.95 for rural include unusual increase in population, natural disaster or other emergency, unusual problems related to major functions required by state law, unusual staffing problems, unusual need for additional money to permit continuance of a program that provides substantial benefit to county residents, or reduced or unusually low growth rate in the property tax base of the county. So those are the reasons provided in statute where you as a county can exceed either that 350 or 395. Now, how do you do that? There's basically two ways. You can have a special levy election, or you can include additional information with the notice of public hearing on the county budget. And 331 425 and 331 426 provide the process. I do suggest that you can consult with your county attorney prior to pursuing this option, especially for if it's the first time you've done it. You will find more information on this within your county budget instructions. Additionally, as we'll show you when we talk about the online budget forms, you will see additional budget pages that speak directly to exceeding the general basic or exceeding the rural basic. Supplemental property tax levies. So we talked about those general basic and rural basic. You also have general supplemental and rural supplemental. These levies are limited in purpose, but not rate limited, not limited in amount. 331 424 1 talks about the reasons you can use the general supplemental for general county services, and 331 424 2 talks about the reasons you can exceed the rural, you can use the rural supplemental for rural county services. Keep in mind, in order to use those applicable supplemental levies, your general or rural basic must be at its limit. Debt service levy. The debt service levy is available to you to pay for certain judgments, pay for principal and interest on general obligation debt, certain payments under a lease or lease purchase agreement, and the lease cost of a joint city-county building. So the debt service levy, again, is available to you if you have those types of costs, and it is limited in purpose, specifically to service debt, and it is not limited in a particular rate. Cemetery levy, there is a levy available to you to provide coverage to cemeteries. The levy limit is 6.75 cents per $1,000 of taxable value, and that's to repair and maintain cemeteries under the jurisdiction of the Board of Supervisors. So this includes pioneer cemeteries. It is it is levied for and accounted for within the general fund, and currently around 20 counties use this levy. There is also available to you as a county a emergency services levy. Now, this is not the emergency medical services levy that we'll talk about in a minute. This is if a county provides fire protection to a township under 331 385. They would establish an emergency services fund and certify taxes in the township not to exceed those levy limits in 359.43. So basically, the township fire protection levy limits. It's currently only applicable in Polk County. So essentially, Polk County levies for the fire protection rate for the townships within the county. So this is specific to that code section, and currently, again, it's only applicable to Polk County. Unified Law Enforcement Levy. A Unified Law Enforcement Levy is covered under Code of Iowa, Chapter 28E. And there's several steps that are involved in establishing a unified law enforcement situation. A vote of the people is required. You'd want to take a look at 2080-22 if this was a discussion item within your county between, say, you and the county and a city or two within your county. The county tax levy is only on the property outside of incorporated areas, and it's limited in rate to $1.50 per $1,000 of taxable valuation. So, again, there are a few counties that utilize this levy. There's several steps involved in the establishment of it. So, if this was a discussion item that you're hearing from folks, then you'd want to consult your county attorney and closely review those code citations. Flood and erosion control levy. Flood and erosion control levy. It's levied only against ag land valuations. It's limited to 6.75 cents per taxable per $1,000 of taxable valuation, covered under 161E9. This levy is not currently used and has not been used in recent memory by counties. There's specifications regarding the levy, and it is only to be levied against ag land. So there's a few hurdles involved with this levy, and like I said, it hasn't been used in recent memory. The emergency medical service levy, this has received some discussion and some amendments within the last few years. So it may be talked about more. An emergency medical services levy is available up to 10 or 15 years, depending on the population. It does have to be approved at an election. A resolution declaring emergency medical services as an essential service, and again, a vote of the people is required to establish this levy. You would want to, if you hear discussion within your county regarding this levy, and some of you may be kind of currently in the process of establishing or reviewing the options for this levy, you would want to review Iowa Code Chapter 422D with your attorney. There were recent amendments in the 2021 session of the General Assembly regarding this process. So, again, if you are interested in this levy or it's being discussed, that would be the code citation you'd want to take a look at. And it was recently amended, so be sure that you're looking at the most recent version of that statute. It was amended again in 2021 by Senate File 615. So those are the a basic review of the tax rates and levies that are available to counties. I want to take some time now to review our basic uh, timelines for your budget process. So first thing, I mean, obviously, locally, you're having lots of discussion about budgets. You're working through that process with your departments, and coming to agreement on what your tax asking and your expenditures are going to look like in the next fiscal year. As far as statutory timelines and steps, the county auditors certify valuations to Department of Management and to all levy authorities by January 1. You, of course, need those taxable valuations to determine your tax rates and your tax asking. County departments submit proposed expenditures and revenue by January 15th. The board files the proposed budget with the auditor, allowing enough time for the budget to be lawfully published and certified. So, this sort of communication process should be completed by January 20th. The notice of proposed tax asking, which we refer to as the max levy, is published and posted on applicable county website and social media not less than 10, no more than 20 days before the date of the hearing on the max levy. The max levy hearing is held for taxpayers and residents to present their comments for and against the budget. The board then, upon conclusion of the public hearing, adopts the tax asking by resolution. If the tax asking increases from the current year by more than 2%, a two-thirds vote is required to pass that resolution. And the resolution is posted on the county website. Then, okay, so we've got our max levy process completed. Then we go on and publish the regular notice of public hearing on the entire budget, on the proposed budget summary. It's published similarly not less than 10, no more than 20 days prior to a date of the hearing on the budget, the complete budget itself. The hearing is held for taxpayers and residents of the county to express their concerns for or against the budget. The board then, upon conclusion of the hearing, adopts the budget by resolution. The board directs the auditor to certify it and file it by March 31st, so our deadline is March 31st. Citizens have until April 10th to file a budget protest. County auditors certify the county budget and all other local government budgets. So, county auditors and staff are going to be reviewing the budgets for compliance with various statutory items such as proper publication notice, etc. Once the county auditors have certified all those local government budgets, DOM finalizes those budgets and certifies property tax rates back out to county auditors by June 15th. And the county auditor provides the tax list to county treasurers by June 30. And I should say, too, we certify tax rates out to all the individual tax levying bodies. And upon conclusion of the certification of all the different sort of components of a tax rate, then we also provide a consolidated tax rate list to the county auditors. And when we say consolidated tax rate, we're just saying the entire rate added up. So for each and every tax district in the county, there is a consolidated rate that includes the county rate, the city rate if it's a tax district within a city, the school, the community college, etc. So again, that budget submission deadline is March 31st, which this year will be a Friday. So it will actually be on the 31st, and budget documents should be provided to the county auditor's office by their close of business on that day. Late budgets. So taxes levied by county whose budget is certified after March 31st is limited to the prior year's budget amount. So if for any reason your budget would be submitted after March 31st, you could not levy more taxes in that fiscal 24 budget than you levied, requested, in the fiscal 23 budget. So keep that in mind as you're working through your budget calendar and making those preparations. This penalty can be waived by the Director of Department of Management if the county demonstrates to the satisfaction of the director that the deadline was missed because of circumstances beyond the control of the county. And that phrase is really key here. Budget extension should not be requested for things such as not being able to, reach consensus on your budget, just simply forgetting a deadline, things of that nature. It's really intended to be circumstances beyond the control of the county caused you as a county to not be able to meet your deadline. Examples of this could be, illness. Uh, Frankly, the most common example that people face, the most common issue, and the reason why we seem to give most of our budget extensions to counties are newspaper errors. So you submit your budget hearing notice for publication and the newspaper simply doesn't publish it. So that's a problem, right? And as counties know, you are required to publish in all the newspapers that are official newspapers in your county. So we're talking about more than one newspaper. So occasionally someone will publish it on the wrong edition or what have you, and that messes up your budget timeline and causes your situation to be sort of off kilter, and you have to request a budget extension to meet your proper publication notice time frame. So again, if you're going to be late, it needs to be for something that's beyond your control. You can't ask for a budget extension for something like, you know, not meeting, just forgetting, or your board can't, reach consensus. Something like that is not going to be something beyond your control. So just be prepared. Make sure, I do recommend folks sit down when they're looking at their budget process and make sure that the publication parameters of your newspapers you need to publish in, so you know exactly when you need to get your notices to them, so you can meet those 10 and 20 days for each and every newspaper that you publish in. Budget protests. Budget protest deadline is April 10th to accommodate the later budget deadline. The budget hearing notice, according to some legislative changes, has to include information on how to protest the budget. Now, we did that. DOM did do that by adding language to the hearing notice. So that's not something that you specifically have to do. Just be aware that within your regular budget notice is information on protesting the budget. So when we talk about protesting a budget, what are we talking about? It is covered under Code of Iowa 2427. So folks within your county that are affected by your levy can appeal the budget. Essentially, they circulate a petition and file it with the county auditor. Again, it has to be by April 10th. Um, Protests to county budgets have to have at least 100 signatures. So your citizens could circulate a petition, get it to the county auditor by April 10th, assuming, all the signatures are good and there's at least 100, then your county auditor would forward that protest document to the state appeal board. The state appeal board is a 3-member body, including the director of Department of Management, the auditor of state, and treasurer of state. So if a protest document is sent to the state appeal board, they will then discuss with staff, and staff will schedule with the county and the protesters a local public hearing on the matter. Each side of the issue, the protesters and the county, would have an opportunity to speak um, to the issues raised within the protest document. The staff that the state appeal board sent out could then ask questions, etc. Local citizens have an opportunity to speak to the issue. And then staff would take all that information back to the state appeal board for their consideration, and they would issue a written order at a meeting of the state appeal board. So that order could decrease your tax asking, it could decrease your expenditures. It would never, of course, increase those items, but it can change your budget. So just sort of be aware of that. If you hear discussion within your county about potentially your budget being protested and you have any questions, you can feel free to contact me. So your budget's passed. The board must appropriate by resolution the amounts deemed necessary for each of the different county officers and departments during the upcoming fiscal year. Without an appropriation, expenditures are not authorized. So appropriations for counties are an important step, and there is no statutory language or specification regarding what those appropriations look like as far as language or detail. It is unlawful for a county official to authorize an expenditure that's larger than the appropriation. So that's covered in Code of Iowa 331-437 if you are looking for some more information on the appropriations. Budget amendments. So you do need to, during a year, amend your budget if there's going to be any increase in the total for any one of the 10 major classes of expenditures as listed on the adopted budget summary. We sometimes refer to those as service areas. So public health, public safety and legal services, physical health and social services. For Polk County only, the mental health and Developmental Disabilities Fund, etc. Budget amendments have to be effective before you exceed the amounts as indicated in the original budget. Budget amendments do require the same notice and hearing procedures as required for the adoption of that original budget. So you do need to hold a public hearing and provide not less than 10, no more than 20 days notice prior to the date of that hearing on the amendment itself. Budget amendments are also subject to protest, an amendment of a budget after May 31st, which is protested, but the state appeal board doesn't have time to have a local hearing and render a decision on the protest by the end of the fiscal year, so June 30th, is then void. Now, what I would say to this though is if you're approaching June and you feel like you need to amend your budget, certainly go ahead and proceed with that amendment. The only risk then is if someone were to protest your amendment and the state appeal board would not have time to hold that local hearing and go through their process, then it would void your amendment. But it's better to go ahead and amend and I guess roll those dice if you find yourself, approaching June and you need to amend. And the budget amendment process, none of that was changed by some recent law changes that included that max levy. So just sort of keep that in mind. There's been no changes to the budget amendment procedure in recent history. The amendment itself is done by logging into the same system for your budget, right? You use the same budget system, you log in, you go to your current year budget. You would see on the left-hand side of that budget an amend button. You'd click that amend button. The system's going to generate for you a like a one-page amendment form that you would then fill out. It's going to pull your current year budget information in there as far as populating the first column of data with your current expenditures, as had been adopted. If you're in, say, your second or third amendment, it's going to, of course, pull those from that, first amendment or second amendment. A webinar on the amendment process is viewable on that county resource page. So if you find you need to do an amendment, you can review that webinar at dom.iowa.gov/counties. And you can also access instructions for the amendment process within the online amendment form itself. So if you need to amend, there are options for reviewing that information. So, when we talk about amendments, we're also probably, therefore, talking about changing departmental appropriations potentially. Increases or decreases in departmental appropriations don't require a budget amendment as long as you're not exceeding, again, those 10 major classes of expenditures. Obviously, any increases in one appropriation have to be offset by decreases in another appropriation, so you don't exceed those individual expenditure classes. And you would change those departmental appropriations by resolution of the board. An important caveat, though, is decreases in appropriation for an office or department of more than 10% or 5,000, whichever is greater, are not effective until your board holds a public hearing on the proposed decrease. And the notice of that public hearing would need to occur not less than 10, no more than 20 days prior to the date of the hearing, again, in all of your county newspapers. So a similar notice procedure is provided as the original budget. And the code section to take a look at there is 331, 434, 6. So that's sort of our general timeline from the initial budget work to the appropriation of what you had adopted in your budget. We'll take a moment here to provide some information on a couple resources as you work on your budget. On that county resource page, you will find spreadsheets that list the different county tax rates, and it does go back quite a few years, so it's some historical data as well. And what this is simply a two-tab spreadsheet. One tab is the tax rates, and the other one being the levies. It is, of course, by fund and by county, lists the total rate, etc., total taxes. So I point this out for you for historical information if you're gathering some data or if you want to maybe compare yourself to similar counties. Another one to point out is the county budget summary. This is again under, as a link to, I should say, the county resource page under county budgets and AFRs. A couple things here you can review. Let's see, fiscal 20 and older budgets, like the whole budget form on our old reporting system that's linked here. Any county budgets fiscal 21 and newer, you can access on the system you're using now. So you can find, other county budgets, full budgets just by doing a budget search on the new or newer application. You don't have to be logged in to do that. You can pull up any budget just by doing a budget search. What we have on the website as well, though, are some county budget summaries. And this is a 2-tab Excel spreadsheet that has a tab for revenues and one for expenditures. And again, is by county, lists the major classes of expenditures and the major types of revenue, and just provides that information to you for each and every county, for again back several years. So if you're looking for some data on, again, comparisons, what are other folks levying for public safety, for instance, you can pull some of that data if you want to do uh, some data search, or some presentations on statewide issues or statewide levies, anything of that nature. So let's switch gears and let's talk a little bit about changes for fiscal year 24. So, in the 2021 session of the Iowa General Assembly, the county MHDS property tax levy was eliminated. So, no counties are levying for mental health and disability services anymore. Instead, funding is provided from the state to the MHDS regions. And the elimination of the MHDS fund, although it happened in the 2021 session, it's sort of playing out through the budget forms as we move forward. Because, of course, your budget forms list 3 years of data, right? They list an actual year, they list a re-estimated year, and they list the budget year. So there's no MHDS levy unless you're Polk County. So Polk County is treated as a region, so they still report budgetary expenditures and have an MHDS fund, but other counties, every other county does not do that anymore. So you do have no budgetary expenditures in Service Area 4, which is our MHDS expenditures. But again, this has phased in over time. So back in fiscal year 22, you still had an MHDS fund, you had MHDS service area, and so you would still report on your actual fiscal year 22 expenditures out of that service area. These actual data, of course, is just going to come from your financial report, so you'll just be plugging that in there, but just be aware as you look at the forms, you're going to have to enter the 22 actuals for mental health. Um, and I'll show you kind of what that looks like in a minute. And again, there is no MHDS fund unless you're Polk County. A couple notes with county mental health and disability services. If the regions still want to still want individuals to remain county employees, the process to handle that is that of course, the regions and the member counties devise a 2080 agreement or MOU to prescribe the terms of the service, and it needs to be considered reimbursable contractual services. It needs to be clearly defined and tracked to comply with audit requirements that you're going to see at the end of the year. In those instances where an employee is paid via reimbursement from the region and other functions, you really want to be able to detail that, because it's very important that the county general fund is not subsidizing the cost of mental health and disability services. Those costs are supposed to be borne by the region. So if the county employee is providing those services, they should be fully reimbursable by the region. For questions regarding assets, who holds titles, etc., that needs to be determined locally, um, likely with assistance of legal counsel. And cash flow issues need to be addressed between the region and its members with legal counsel and spelled out in their agreement. Again, regarding a situation where the region and county have a contract for the county employee to deliver those MHDS services, the County Finance Committee discussed this last year and recommends the following: that you use a sub-fund of the general fund. And we added a function code to the chart of accounts. It's under Service Area 99040, and that's reimbursable MHDS direct expenses, and that's to track your county revenue and expenses. And then when the counties receive that reimbursement from the region, the revenue code would be 2445 payments from the MHDS fiscal agent to MHDS regional members. There are some additional chart of accounts updates, and these are more recent per the last meeting of the County Finance Committee that occurred in October. And one is just the formal addition of codes related to the opioid settlement. Many counties are receiving funds to help stem the cost and the issues as they occur regarding opioid addiction across the state. There were some cases where some major drug manufacturers settled, and working through the Attorney General's offices, some of those settlement funds are flowing to the states and to the counties, right? So because some counties are receiving those monies, we added formally through the last meeting of the County Finance Committee some numbers to help you track those. There is a special revenue fund number that we added as 0030, Local Government Opioid Abatement Fund. Now, if you're already using that fund number for something else, just use something similar as your fund number. Revenue source is 8120, Government Opioid Settlement. And we did add a function of 3520, Opioid Litigation Settlement. So those have all been added, as well as object codes, object expenditure codes. Um, and so the reason why these are added is because you, as a county, if you're receiving these funds, are going to have to do reporting on how the funds are used, obviously. And so these are the expenditures specifically spelled out in the memorandum of understanding for the settlement itself. So these are the allowable expenditures. You want to track your activities within these expenditures so you can later report on those as required. We also, in the Uniform Chart of Accounts, made a change to the business property tax process. It used to be a credit and now it's a replacement as a result of law change. So, Code 2140, the business property tax credit, was deleted, and 2240, the business property tax rollback replacement, was added. So, and we'll go over that a little bit as far as what that change actually means in a minute. But just keep in mind that code change was made. If you are ever wanting to review the revised Uniform Chart of Accounts, here's just a link to that document. You can find it on our website. We always have the most recently approved version available on the website. So I alluded to it before, but we'll go over some changes related to the business property tax change. House File 2552 changed the business property tax credit, the BPTC, from a credit to a rollback replacement. So it used to be a credit against levied taxes after a budget was completed and individuals received their tax statements. They would see on their tax statement that they got a credit against their levied taxes of a certain amount, and it was available to those that applied for the business property tax credit. Well, what the law change did is go in and change that from being a credit against levied taxes to actually a rollback. It's a two-tier rollback for commercial, industrial, and railroad properties. So the first $150,000 of a business of a unit receives the residential rollback, which is usually around 50%. And then the remainder of the value of that property receives the 90% rollback that commercial, industrial, and railroad have received in past years. So, because it is a two-tier rollback, and this is specific to those county auditors and staff that use the valuation system, just to note that your rollback worksheet will no longer calculate for you as far as providing a comparison of your taxable value to a calculated taxable value. Because it's a two-tier rollback, we can no longer apply one percentage to commercial, industrial, and railroad and arrive at a taxable value. And because of that, this is more for those that view the reports. If you view, or you have, anyone else, member of the public or whoever it might be, viewing taxable valuation by class reports, we did add a footnote indicating that the two-tiered assessment limitation that is applied to commercial, industrial, and railroad value per Code of Iowa 441-21-5. Because of that, the difference between 100% and taxable valuations varies. You can't apply one specific percentage number and calculate the taxable, so it cannot be determined. And frankly, this footnote is just really to give a heads up to folks so they don't think they can take the 100% value, apply, 90% to it, and arrive at the taxable. It just doesn't work like that anymore. So it's just a heads up. But if you get questions from folks and you feel you can't answer them, you can certainly send them my way. Another change is that House File 418 passed in the 2021 legislative session, and it eliminated the multi-residential separate class of property, beginning with these assessments we're dealing with for our fiscal 24 budgets. Those 2022 assessments are used for our fiscal 24 budgets we're talking about. So the Department of Management property class multi-residential for the 2022 assessments, which are your fiscal 24 budget values, that's changed back to reserved. And there's not going to be anything listed there. So, with those 2022 assessment reports that are used for fiscal 24 budgets, multi residential class is no longer there. It's reserved, there's zeros. Everything that was considered multi-res is now moved over as just a subclass just within that residential class. So this is again just sort of a heads up if you have that question. So this is just an example of one of our reports. You see multi-residential used to be listed as a class of property, but it will be changed for 2022 fiscal 24 budgets to reserved here, just like the one below it. But if you were to pull up, say, the fiscal 21 reports, you'll still see multi-residential and value listed if applicable. So let's talk just for a moment on the commercial and industrial replacement phase out. With the changes to the commercial and industrial replacement process, what counties are seeing is that their replacement is being phased out either by 1/5 each year or 1/8 each year until there is no replacement for anyone in fiscal year 30. Essentially, what the legislation did is take a look at what you got in fiscal 22, and then beginning with the current year, fiscal 23, just ratchet that down by an eighth or a fifth each year. And whether it's an eighth or a fifth, so whether it's quicker or slower phase out, depended on how your particular county compared in valuation growth to a state average. So if you were growing faster than state average, you are phased out quicker. And if you slower growth, then you're phased out slower over the 8 years. So back when these were paid out earlier this year, you received each and every county treasurer received a county statement listing out what the individual levy authorities in their county received or are to receive for the two payments. So there's a fall payment and spring payment. Obviously, you already received the fall payment. The spring payment will come in the spring. We know what these amounts are again because it's just fiscal 22 amount, reduced by 1/5 or 1/8. So what this is just telling you is what your fall payment and your spring payment were to be for fiscal 23. We will do the same thing for fiscal 24 and moving forward. Um, and then, so this is a county statement, which says what all the levy authorities get. And then there was also a individually prepared um, sort of allocation tool, I guess is what we called it, that was provided that gave you an opportunity to see how those funds should be deposited within your separate funds of the county, right? Like your general and rural, etc. So that was provided to you. That will be continued to be provided in the future regarding your future CNI replacements through the phase out. Again, there's an allocation tool that will be provided each year. And if you're wanting to know the estimated amount that you're going to receive as CNI phases out, you can go to the following section of the website, dom.iowa.gov. This is the commercial and industrial replacement payments. And there's one in there that talks about future payments. So you can pull that up. You'll see a county tab. You find yourself on the county tab, and through the life of the replacement, you'll see an estimate of what you should get each year. So you can use that for budgeting. It's a way to just have an opportunity to budget those revenues based on what the law change resulted for your county. So we talked about that. I do want to provide a reminder or just an education piece about the max levy process. For those of you that have done it a few years, it's not changed, but it is still something that sometimes trips people up. So we want to make sure to review the process and the different steps involved. So, the max levy process, why do we have it? It's an attempt to further notify the public about property tax increases. This is only for cities and counties, and it requires an additional public notice, public hearing, and resolution prior to your regular budget notice, public hearing, and resolution. So this piece is just talking about what you're proposing to ask for in taxes, not expenditures or anything else. It's just like, hey, the public, this is what we think we want to ask for in taxes this year. It does have a separate not less than 10, no more than 20-day notice period for the hearing. Certain pieces of information have to be shown in the notice of the hearing and in the resolution. The notice has to be published, posted, published, whatever, on the county social media and websites, same day as when it goes in a newspaper. And the resolution has to be posted on the website after it passes. And it does have to just remain there. So for counties, when we talk about what levies are you notifying the public about, we're talking about your general and your rural levies. So general basic, general supplemental, rural basic, rural supplemental. We're not talking about your debt service or if you have any of the voted levies like unified law or EMS. We're not talking about that. We're only talking about our general basic, general supplemental, rural basic, rural supplemental. And there is required information on that hearing notice. Column 1 is going to talk about what's the um, current year, so the year we're in, fiscal 23 in this case, what's your certified tax rate and what's your tax dollars for those general supplemental, rule supplemental. So in the current year we're in, what did you ask for? Column 2 is if we asked for the same amount of money, but we used, say, the valuation of the budget year for fiscal 24, what would our tax rate then be? So ask for same dollars, but look at the valuation for the budget year, which is probably higher. In most cases, your value goes up in total. What would that mean for your rate? Most cases, it's going to go down, right? And then column 3 is where you say, okay, in the budget year, with the valuations as they stand for the budget year, what do we want to ask for? So it's a comparison. What are we doing right now? If we asked for the same dollars, but our value went up, what would that do to our rate? Most cases it would go down. Column 3, what do we really need to ask for? Is it more than we're asking for in the current year? Is it less? Etc. So this is kind of what it looks like. So anytime you're looking at the online system, you enter information into blue cells. White cells are either pulled from other sources or they are calculated fields, etc. So you can't enter into white cells, you do enter into blue cells. Okay. So first year is our current year data. You notice it's white. Our system's going to pull all that data because we already have it. DOM already has this data, right? We already know your value. We know what you asked for. We know what your rate is. So then we go over here, taxable valuations. This value rate, we're assuming this is after January 1, so your county has filed value. So we know what your budget year valuation is. We just pull the tax dollars right over. We can see that if we asked for the same amount of tax dollars as the current year, but it was applied against our budget year values that have went up, then our tax rate would go down. So then we look over here. This is, again, our budget year values, but as a county, we're saying, actually, we need more revenue than we're getting in the current year. For our budget year, we have more things going on, what have you. So this is what we want to ask for. Again, same down here. And then it calculates for you a proposed percentage change. Down here, you have to explain any increases in the budget. I do suggest you type something in here. I think it's going to make you type at least a few characters. If you don't have any increases, you would just simply say no increases in the budget. If these are 0 or negative, if there's any increase here, you want to go ahead and explain it. And then, of course, you list your website as well, because your notice needs to be on your website. Okay, so you publish that notice, you have your hearing, folks speak to what you've provided in that max levy. After the hearing, the resolution must be adopted, approving the maximum tax dollars. And that's going to sort of set your ceiling as far as what you can ask for in maximum tax dollars for general supplemental, rule plus rule supplemental. If the amount is more than 102, more than 2% increase than the current year, the resolution has to be passed by 2/3 vote of the governing body. And we have about 1/3 of counties that have 5 supervisors. So in those cases, 4 supervisors would have to vote affirmatively if your increase was greater than 2%. The adopted resolution must be posted on the county website and left up there. And also needs to be posted on social media accounts if you have them. So the resolution itself has to include the following: statement indicating that the publication posting requirements of the bill were met, statement indicating the date of the public hearing, a not to exceed statement for both general and rural county services, maximum dollars. So the resolution will say whatever the board adopts, but it needs to be not more than what you published in your notice. You need to indicate if the dollars requested results in a greater than 102% increase for either general or rural county services. And that's important to keep in mind too. For the county, if your, say, general is increasing 3% and your rural is increasing 1%, because one of them is increasing more than 2%, then you need to have that 2/3 vote of your board because at least one of those is increasing more than 2%. You do want to have the ability to indicate the vote of each member. And again, this is needed to ensure compliance with that requirement of a 2/3 vote. And we do recommend consulting with your county attorney on any specifics related to your particular county. We provide within the budget instructions an example of a resolution that could be used. You can use this or not, but if you don't, then I do highly recommend you work with your county attorney on what the language should be. At that point, the county then proceeds with the budget process as always. You hold your public hearing, publish your notice not less than 10 no more than 20 days prior to the date of the hearing in all of your newspapers. Hold your hearing, adopt your budget by resolution. And again, that budget hearing notice, your regular budget hearing notice, is going to include that statement about protesting the budget. So, just a few reminders. You must complete that notice, public hearing, and resolution adoption prior to the date that you set the date for your regular budget hearing. So, these are not processes you do at the same time. You do the max levy process to its completion, meaning adopting a resolution, and then you can set the date for your regular public hearing notice. You can approve less property tax dollars in your max levy resolution than you published in the max levy notice, but not more. And then when you go on to adopt your budget, you can ask for less property tax dollars than you approved in the max levy resolution, less than what you published in your budget notice, but you cannot increase, not more. So at this point, I want to take a few moments just to give you an overview of the online budget system. If you have used the system before, it is the same. It is the one system for valuations, budgets, amendments, and annual financial reports. The login access should transfer if you had previous access to the system. If you have someone that needs access that doesn't have it, just send me an email. County auditors, if you're the county auditor role, you see pretty much everything, the valuations, the AFRs, the county budgets, and the budgets of the other folks in your county. If you're just a budget submitter, you're just going to see the budget. If you're a budget and annual financial report submitter, you'll see both. When you're using the system, if you use a tab key, it moves between the cells that you can enter data in. You can use arrow keys side to side and up and down. Ending fund balance are calculated for you, and they're produced by subtracting the sum of all expenditures from the sum of beginning balances and revenues. And as you move within a page, the cell that you're in is highlighted and the row and column should show a green highlight. When you're ready to work in the system, you go to that county resource page, dom.iowa.gov/counties, and you select the blue button titled Submit Valuations, Budget, and AFR. You log in using your Enterprise ANA account ID. When you're on the home screen, again, it depends on what your role is. If you're a county auditor, you're going to see valuation, local budgets, which include budgets and AFRs. If you're a budget submitter, you just see budgets here. You wouldn't see the valuation access, etc. But in particular to the budget screen, if back here you clicked on budgets, Then you would see the budgets that are in the system for your county. So you'd see the last couple years. We see those are finalized, but if you needed to amend this current year budget, you can click that amend button as I referenced earlier. But to enter the fiscal 24 budget, you click edit to get in there. The pages of the budget are tabs across the top of the screen. So your regular budget hearing notice is the hearing budget adoption tab. Max property tax levy notice is the max levy notice tab. Budget summary is a proposed budget summary tab. And the adoption of budget and certification of taxes tab is the property tax tab. Revenues details, of course, found in revenues detail. And then your service area expenditures are listed out here. Long-term debt schedule is referred to as long-term debt schedule. And if you're a county, as I talked about earlier, that would need to exceed the general basic or rule basic levy limits, you would need to complete the exceed general or exceed rule tabs. If not, you just ignore those. Once the 2022 valuations are filed by your county auditor, the fiscal 24 valuation figures that you need will be populated for you. So they'll go into that max levy notice and they'll go into your property tax tab, etc. The property tax tab, as I mentioned, displays those valuations. So you can enter your property tax request and it will calculate the rates for you. Until valuations are filed and anytime the county auditor unfiles values, you'll see this notice at the top of your screen on your budget. And it's just telling you that your valuations aren't in a filed status. Either they haven't been filed yet or your county auditor has went in and unfiled them because they have to make corrections or changes. So just be aware that either you don't have value, so you can't really, finalize your max levy or etc. Or your value's potentially going to change, so you don't want to file anything right now. Um, if you have questions about what's going on, you can certainly contact your county auditor. And again, first thing you're going to do is that max levy sheet, right? You're going to go in, you're going to enter in your dollars requested to provide that max levy notice to your public. Revenues detail, this is where you enter in all your revenue. Your taxes levied on property are going to pull over from the property tax tab. You enter into the blue tab. And if we looked over here a little bit further, you'd see the actual column where you plug in your actual data and the re-estimated where you plug in your fiscal year 23 data as amended or re-estimated if you have done that. And this is just an example of one of the service area pages. Again, looks just like your software information and is provided here. You enter data into your blue cells. Service area 4, as I talked about, that's your mental health service area and has been phased out for everybody but Polk County. So fiscal year 23 is populated with zeros because you were not allowed to list expenditures in there. Budget for 24 is the same. It's populated with zeros. There's nothing you can do here, but you do need to enter in your actual 22 data because you were able to list expenditures in that service area for 22. If you want to include additional electronic or virtual meeting information, there is a text box on the bottom of the public hearing tab if you want to add some more information in that regard. When you're in the system, you can check errors at any time. You can save at any time. We do recommend, of course, you do that often. You can print at any time. Essentially, you can print the full budget or just the current tab. That's a new addition to our system that you can print only the current page you're working in if you want. And once you have proposed your budget for publication, you can also print only the publication notice. You want to be in Google Chrome, and when you're in there, you can select your local printer if you want to print a hard copy, or you can save off to PDF as your destination, thereby, having that form that you can save to your machine and email to your newspapers, what have you. Max levy tab, once again, per statutory requirements, you got to do this first. That first column of data is populated for you, and using that previously filed data, and you're going to be entering into those blue cells. Upon completion of the max levy form, you select the button Max Levy Propose on the top left. It generates a hearing notice for you to publish. And then to get sort of the date, time, and place, you're going to enter it into this pop-up box that you see show up when you click that propose button. Again, the system generates a notice that you can print or save. And keep in mind, you can enter data into the supplementary pages of the budget form at any time during the process. As a lot of folks, what you'd want to do, frankly, is go in, plug in all your actual data from your completed annual financial report. Fill out that actual column, plug in your re-estimated with your fiscal year 23 budget as amended, and then any revisions that should be the case because of changes in your current year situation. So you can enter that data in there, or go ahead and enter some of your proposed expenditures, but you must complete the max levy process first prior to proposing the entire budget, right? So you can't propose or publish the regular budget notice until the max levy notice has been proposed. So the proposed publish button would be grayed out until max levy has been completed. Once you've proposed the max levy, so in this case, we're showing a max levy that's been proposed, then that proposed publish button for the regular hearing notice would be blue and available. Of course, you need to check errors, and the system's going to tell you you cannot publish your budget if you have errors. Warnings are in yellow, and those are allowable as far as publication. They're just sort of heads up type situations, but you cannot publish with errors. So you do check your errors, and of course, what you want to see is congratulations, no errors found. When you're error free, you propose publish your budget to obtain the regular hearing notice. Again, you get the pop up screen that asks for time, date, and place of the hearing notice. Similar to max levy, you can print it, you can save it. If you are exceeding the general basic and the rule basic, you have to complete those tabs and also publish those notices. If not, you just ignore those and they don't need to be printed. You can also access the hearing notice at any time after proposing by going to print on the top right. So, following the public hearing, obviously your board is going to discuss and they can make allowable revisions to the budget by decreasing the tax asking or expenditures. So, to make those changes, you return it to draft, you make the changes, save. The budget is again proposed published, although not published in the newspaper again. You just leave that original publication date in there, unless for some reason you actually are republishing. And then you go ahead and click that adopt button. And you enter your adoption date and also your resolution number and click adopt. At that point, you file the following documents with the county auditor: your proof of publication for the max levy notice from your newspaper, the approved max levy resolution, the proof of publication for your regular budget notice, and the signed adopted budget and supplementary pages. Now, we do also recommend filing the budget resolution, although it is not required by statute. So that's a walkthrough and overview of the fiscal 24 county budget process with Department of Management. Please keep in mind that at any time you have any questions, I am happy to visit with you. You can reach me by email or reach me by phone. Thank you very much.